this is going to be a different presentation for me because I feel like every time I'm here, I've always been cautious and, short-term bearish, but long-term bullish. So enough of that. I am the most bullish I've been on this market probably ever, precious metals specifically. So, let's get right into it. This is the most bullish setup for gold in the last 50 years. What has happened in the last couple of weeks is very significant. I'm going to get into that. So, you guys, you hear lots of presentations. There's, lots of people are telling you things. We hit X meters of this. This is going to be great. Gold's going up, blah, blah, blah. So, just to make it easy for you, you can tune out after this. These are the three things you should remember. A real bull market, and a decade-long bull market, at least in precious metals, has begun. Now, secondly, we have the setup for gold to double in the next 2 years. Can silver get to $100? Maybe. It'll depend on, are we in a recessionary environment? Are we going to be in an inflationary one or a mix? So I'm not quite ready to say silver's going to go to 100 in this move, but I am saying I'm putting myself on the chopping block. You could yell at me if it doesn't happen. Gold will double in the next 2 years. And lastly, you got to subscribe to my newsletter. How are you guys going to know what to buy if you don't subscribe to my newsletter and other newsletters as well? I'll get more into that later. But I wanted to put this chart in the presentation somewhere. There's all these historical data points, and if we compare gold to them, and if we look at 100, 120 years of history, and we just think, geez, if gold's next top, its next major secular top, where is that going to be? It's not going to be at 3,000 or 5,000 or even 10,000. It's going much higher than that. Probably in the next, eventually, I think this move is going to continue into the 2030s. But if you look at, oops, got ahead of myself. Okay, so the last major peaks in precious metals, or gold specifically, the monetary base was 100% backed by gold, those two times. And where we are now is not even anywhere close. And just one data point, in 2008, right about there, we were at about 30% backing, so not that long ago. To get to 30% backing today, that's like $7,200 an ounce. So that's only 30% backing. So it's really not that far-fetched, those levels of gold prices. Now, in this chart, we're looking at gold against the stock market, and that relationship there is right in the middle. And, the best historical comparison to where we are is really the late 1960s. Gold against the S&P 500, it's making this ratio, it's making a similar formation. I know the price was fixed back here, but even if it wasn't, it would look similar, and there would be, maybe here, there would be a base. So, and then we have the CAPE ratio, the 10-year PE for the stock market. Look at what happens when the CAPE gets really high. You have major lows in precious metals relative to the S&P 500. So you have the Great Depression there, and then you have here, it wasn't quite that high, but that was a peak, and then we have 2000, and then we have here. So this gets to the point that gold in the last 4 or 5 years, we haven't been in a real bull market yet. For gold to be in a real bull market, it has to outperform the stock market consistently, over a period of many years. We saw a little bit in 2018 to 2020, but the stock market and gold have been going up together. We saw that in the 1960s, gold stocks, not the stock market. So that's the similarity again. But again, to be in a real bull market in precious metals, you have to be outperforming the stock market on a long-term basis. And I think in the last couple months, we've seen the start of that. Now, similar chart, except we have gold stocks against the stock market, and with the CAPE ratio here, then gold as well. So we can see, again, very similar to the 1960s. What's going to happen? We're getting close to the point where gold stocks are really going to outperform, and here we have gold, the super bullish cup and handle pattern there. That's just getting ready to explode. And so I want to talk about major breakouts historically in both gold and the stock market. And so for the stock market, we have three significant multi-decade breakouts you can see here on this chart. And what's interesting is this is a cup and handle right here, similar to what we're going through in gold right now. In 1949 to 1957, this was like the best 8-year period for the stock market. I mean, it only had a little correction. So breaking out from this pattern was super bullish. And look at what happened after the breakouts from this here is the S&P, but the Dow was more of a cleaner breakout. But these major breakouts, they gave way to huge moves. Now, we had another one here in 2013, but the valuations for the stock market, they're already extreme right here. Whereas, I mean, even here, valuations were not that great. So that's why this is petering out. And that's why these kept running, because the valuations were in the basement right before these breakouts. But the point I'm getting to is you can see how significant these breakouts are. And so this is gold, and this is setting up for, another significant breakout. And so, I mean, the prices were kind of artificially low. They would have been higher in the 60s. But nevertheless, I mean, this was a huge breakout in 1971, 72. And then here in 2005, I mean, after this, gold went from the low 400s all the way up to almost 2,000 in 6 years. I think we could see something similar. And these arrows, by the way, this is when the stock market peaked. So we're going to have another, I mean, normally the huge gold breakouts occur after the stock market peaks. But, I mean, it's possible that the stock market peaked a couple months ago. But I mean, that's the symmetry, is that these major breakouts occur and you have these huge moves after the stock market peaks. And it makes sense because if gold is going to have, if it's going to have this huge breakout and then run for 3, 5, 7 years, it has to be outperforming the stock market at that point. Capital has to be flowing out of stocks and bonds and into gold and other hard assets. So what this chart is telling you is we're about to see that again. And this is a better look. This is a better look because after breakout number 3, which is what we're embarking on right now, I mean, you can just see potentially, you can visualize that it's not that extreme if it were to go to these higher levels, 3, 4, 5, 7,000. And so we're breaking out of a textbook cup and handle pattern. And the vertical lines there, the target, that's the log target, which is a percent target. So if you measure from the bottom of the cup to the top, and then you add that, we get a measured upside target of 3,000. But if you use a percentage, which is viable, that gives us a target of about 4,000. And historically, I looked at in major markets, like all of the multi-year cup and handle patterns, and the percentage target was hit like 6 months to a year after the first target was hit. So where gold is going to hit 3,000 and then hit 4,000, maybe 6 to 12 months after that, if we, I mean, that would align with history. And so I only got a couple more charts here. So this chart is, I mean, I love this. This shows the capital that's in, the gold stock ETFs divided by the capital that's in, all equity ETFs. And I mean, just a couple months ago, I mean, this was like at a 13-year low. So a couple months ago, this is at a 13-year low. And now gold is breaking out of a cup and handle pattern, an 11-year base, setting up for a huge move higher. And then we look at the stocks and then look at this. So a lot of money is going to pour into the stocks, and pretty soon too. So that's why I love this chart. It just shows how much room we have to move before it gets extended. And so this is my thinking of how things could play out over the next couple of years. I mean, we could, see some similarities to that stagflationary recession in the early to the mid 70s. And, what I'm looking at here, the blue arrows show the peaks. And so, it is possible that precious metals can perform well during a recession. But as you can see here, gold peaked at the end, then gold stocks, and then early into the recession, you had a peak in commodities and silver. So that's why I'm hesitant to say silver can get to 100 on this move, is because if we repeat this pretty closely, then obviously gold and silver would go much, much higher, but silver with the industrial, that side, it would peak before gold. So that's just, this is something to be aware of. This isn't an imminent thing. I'm just looking at what's possible over the next 2 or 3 years if we follow history. But, maybe it'll be a little different, maybe not. But, maybe the yield curve is really close to inverting. After the yield curve inverts, on average, you get a recession 12 months after that. So if the yield curve inverts in the next couple of months, we're probably going to have a recession next year. But when the recession starts, you can still make money in precious metals and commodities, but not through the entire thing. But with that being said, since we still have, maybe 9 months, 12 months, whatever, to when the recession could start, that's going to be a period when a lot of capital should flow into precious metals. So, this is just a problem to worry about, 12, 18 months from now, after we all have huge gains. And that's it. I'm way under time because there's really not, we have to keep things simple. And there's, I don't want to tell you too many things that you can't remember. This is the best setup that precious metals have had in the last 50 years. And what's different as far as what's happened in the last couple of months, not only is gold embarking on this really significant breakout, but this is happening while the stock market and economy are struggling. And so that's what you need for a real bull market. And we have not had that real bull market in the last 5 years. And so when you get into a real bull market, that's when the huge explosive gains can happen. And, the cup and handle pattern, it's super bullish. I'm shouting it from the rooftops. Gold is going to double. It's going to hit 4,000 in 2024. Silver's probably going to break 50. Does it have enough juice to get to 100 on this move? Not quite sure, but breaking 50 is still pretty damn good. That's more than a double. And, last thing, I hope everybody, not only should you subscribe to my newsletter, but you should subscribe to all the newsletters and then ask every newsletter writer, give me your top 2 or 3 picks. Those are the companies you probably want to buy. You don't want to buy someone like, hey, this is my 11th best pick or my 7th best pick. So that's what I would do. Subscribe to my letter, subscribe to the other ones, find out everybody's top 2 or 3 picks, and those are the companies you want to focus on. And then, if I'm right, then, next time I'm here, I'll talk more about, how far the move will go, selling strategies, et cetera. That's it. We're in a really, really good position. You have to get invested ASAP. If you're not, I hardly ever talk like this, but this is the bullish I've been, at least in my career. So things are setting up really well for precious metals. And we don't even have the sentiment wise, look, we don't have a packed house yet. So, everyone doesn't care yet, but they will eventually.